You must have heard it that trend is your friend. But the problem is most traders, they cannot find the overall trend of the market. They always end up taking the trade in the opposite side of the trend. But this problem can be solved if you use moving average, because moving average is the only indicator that can help you identify the overall trend of the market, and using it you will be able to find a good trade opportunity that aligns with the trend. But the problem is moving average itself do not give you much confidence on where to enter the trade. So in this video we're going to learn how to use moving average with MACD indicator to trade with the overall trend of the market. So let's get into this video. So I am going to give you two examples, one for the buy trade, one for the sell trade. In the first example, we are using Euro US dollar pair on a 15-minute time frame. As we need two indicators, moving average and MACD, so we can add that by clicking on indicators, typing moving average here, selecting this one, and then adding MACD as well, which is moving average convergence, divergence. And after adding these two, we're going to change the settings. First, we will change the settings of moving average. Then we will change the settings of MACD indicator. So double click on the moving average and we're going to use a 50 period moving average. We have to put 50 length no matter what time frame we are on. This strategy is applicable to all time frames, whether you want to trade on 5-minute time frame, 15-minute or 1 hour, or even on a 4-hour time frame. We're going to be using a 50 period moving average in this example. And to change the settings of MACD, we're going to remove the MACD from here and the signal, as we are only going to be focusing on the histogram of the moving average convergence divergence indicator. So the very first step that we need to follow is to find the trend of the market with the help of moving average. Now, how do we identify the trend? If the market it is staying above this 50 period moving average, that means we are in the buy. And if the market is below this 50 period moving average, that means we are in the sell. And whenever market either goes above 50 period moving average or goes below 50 period moving average, there has to be a break of strong support and resistance area. So in this example, we can see we had this support area right here. Market broke it to the downside, and at the same time market also went lower than this 50 period moving average. So it means we are in the sell. But right after we created this lower low right here, buyers made a strong movement to the upside. Not only we went higher than our 50 period moving average, but also we broke this previous big resistance that we had. There was this resistance, we tested it again, and then the third time again. So this was a big resistance. We broke it to the upside and ended up creating a big movement from here to here, and we made a higher high right here. Now, as we have made a big movement to the upside and we are also above our 50 period moving average, and we have also broken this previous strong resistance area, not only this resistance area that we have here, but also a big resistance that we created right here. We also went higher than this. So we have broken two big resistance previously and ended up creating a higher high right here. So at this time, we know that we are in the buyer's market. So we only need to put our focus on the buy. So from where we can take the entry, and why do we need the divergence inside the MACD indicator, and how can we find the divergence? So the thing is, when market will create a higher high after breaking the previous resistance, we need at least 3 swings from the sellers. Like the buyers are making a strong movement, we have broken the previous resistance, we have also went higher than our moving average, and when the sellers are making a movement to the downside as a pullback, we need at least 3 swings, like the first swing, the second swing, or the third swing. And they can also be called legs of the pullback. First leg of the pullback, second leg of the pullback, and then third leg of the pullback. Now the most important thing here is that when we are making these pullbacks, the market must go lower than our moving average. As we can see right here, from this higher high area, sellers made a first leg of the pullback. Right here we have made a first leg of the pullback, then buyers showed up, then the sellers made second leg of the pullback right here, then there are some buyers, and at the same time when we are making these legs of the pullback, the market has went lower than our moving average. Now that's a good thing, because we want people to turn into the opposite side of the direction. I told you earlier in this video that moving average itself cannot help you take the trade, cannot help you identify when to enter, when not to enter, from where to enter and where not to enter into a trade. So that is the reason we are also using MACD, because we need divergence in the market inside the overall buyer's trend or inside the overall seller's trend. So So after the second leg of the pullback, market went lower than the moving average, and a lot of people who were only using a moving average, they ended up taking sells from here. They definitely sold because we were rejecting lower than the 50 period moving average. However, it's a good thing for us because we have not yet formed three legs of the pullback. So the third leg is when we go lower than our second leg of the pullback, which we did right here, then we can only consider that our third leg. So after we have the third leg, notice one thing. Inside the market, we are making lower lows, right? We are making lower lows. We are slightly going lower to the downside. But in the MACD, if we look at the histogram, instead of us making the lower lows, we are making higher lows. So that is the divergence. Instead of us making lower lows to the downside inside the MACD as well, we are making higher lows. So that means we will easily continue our overall trend of the market, which is buyers in this example. So we're not gonna take the trade right after we see a divergence because we are still lower than our 50 period moving average. So what we need market to go higher than our 50 period moving average, and we did that right here. We went higher than our 50 period moving average. So anywhere we place our trade here, put our stops right at the area from where the pullback ended, and market started to go up across the 50 period moving average to the upside, and we place our target at 1.5 risk to reward ratio. That will be a good trade opportunity for us, and look how it performed. So let me show you one more example so you can have a great understanding of how this strategy works, how we need to find the overall trend with the help of moving average, how we need to use MACD for confidence to take the trade, where we need to put our stops, where we need to put our targets. So in our second example, we are using a pair of Euro Japanese yen on 1 hour time frame. We have our 50 period moving average, we have our MACD. So here we can see that market, it made a strong movement to the downside. We went lower than the 50 period moving average, and we ended up creating a lower low right here, and we broke this big support level that we had here when we were making a strong movement to the downside to create this lower low. So we know that we are inside the overall sellers market. Now the thing is, we need pullback. So for us to consider something a pullback, we need three legs. So the first leg is gonna be here, when the buyers made a strong movement to the upside on 1 hour time frame, then sellers showed up. Then from right here, this is the area when we made a second proper leg, because that is the price when we actually went higher than our first leg of the pullback, which is right here. So we went higher than our first leg of the pullback. We are considering this our second leg. Now during this pullback, the market has started to go higher than our 50 period moving average, and a lot of the traders are taking the buys from here. They are taking the buys from here, and they are also taking the buys from here, and that is good for us because we want majority of the retail traders to turn into the opposite side of the overall market direction. We are just having a pullback. Keep this in mind. This was a big strong sellers movement, a very impulsive sellers movement to the downside that created a lower low, and we are just making a pullback. Same story here. This was a strong impulsive movement to the upside, which we can see from here, and we only made a pullback. So while making a pullback here, after the third leg from here, when the sellers made a strong movement, we are now back again lower than our 50 period moving average. Now at this time, what we need confluence, and we can have it when we will find the divergence in the MACD indicator. So here we can see we are making the higher highs. So we need the market to create lower highs in divergence. And if we look at here, you can see instead of us making a higher high when we were making the buyers movement, we are creating lower highs in divergence in MACD indicator. So that means there is definitely a lot of divergence, and we will simply just continue our trend to the downside as we have a seller's trend. So anywhere we place our trade from here, put our stops right at the area from where the pullback ended, and our target at 1.5 risk to reward ratio is definitely a good trade opportunity. So that's how we should use moving average to identify the overall trend of the market, and to have confidence so we can identify from where we need to take an entry, we use MACD indicator to show us some divergence. So let me know in the comment section if you guys have any question, and if you guys got some value out of this video, be sure to like this video, hit the subscribe button, and turn on the notification bell. I will see you in the next video. Bye for now. Peace out.